What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I got 5 high-yield dividend stocks to buy right now. I own all of these. I like a 3 to 5% range or above, as long as the dividend stocks are stable. I bought a new dividend stock, so that's my bonus stock. And these are stocks in demand. These are stocks that people use every day. These are real estate investment trust stocks, and these are pretty much stocks that I'm going to give you a hint. Probably shouldn't be using, but people do it anyways, and they don't care. So if you are new to this channel, again, these videos are free to you guys. Everything is completely free. All I ask you to do is hit that notification bell, smash that like button. I'll just keep on making more videos for you guys as dividend investors, because we all want to make money. And again, I'm based on the disclaimer. Obviously, this is entertainment purposes. This is not... I'm not a financial advisor. This is not for, financial advice. So I have a disclaimer in the comment section. But I absolutely love these stocks. I am rolling with dividends with these stocks. And let's check these out right now. And that first stock is Iron Mountain. It's sitting at $44.38. Definitely less than $50, which makes it a very attractive stock. Not just that, the dividend yield is 5.57%. And a lot of people wonder, like, how is Iron Mountain doing? I mean, they're a real estate investment trust. Now, I myself, as a registered nurse, anytime there's paperwork, it gets stored in Iron Mountain. And it just stores all these papers. There's actually one location in Cleveland, Ohio. You can correct me if I'm wrong, but they're well diversified. I got to show you what these guys are about and why they're a very attractive real estate investment trust. So let's check them out on their website. This is what I love about Iron Mountain. They're well diversified, and they're everywhere now. I'll show you their map in a second, but this is what they do. So they do business storage and delivery. They store assets and delivery when needed. They have consumer storage. They have emergency response storage and delivery. They have fine arts and valuable artifacts. So they're well diversified with their stuff. And the biggest thing that I like is their cloud storage that they're really focusing on with data centers, data protection, data restoration, mitigation. Their Iron Cloud data management, they're really pumping that up, and they're really adapting. And they store medical documents. So, stuff that's documented and stuff that's saved there for a long time. They do shredding. They do pickup services with Iron Mountain and their partner network. So sometimes you need stuff shredded, medical documents, telemetry strips, like in the hospital. Those are just some examples. Secure shredding, shred your records and documents. Obviously, stuff that's due, or I think the law is like you have to store medical documents for X amount of years, and then they shred it. And that's the thing. Like I said, there's medical documents and stuff that need to be shredded. So these guys are well diversified. And I got to show you their map and how big they are. This is what makes them so attractive. So they're a global leader in innovative storage and information management services, blah, 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 founded in 1951. So this is where they are. So look at this. 225,000 customers worldwide. They help customers climb higher to transform their businesses through a wide range of services, including digital transformation, data centers, secure record storage, information management, secure destruction, and art storage and logistics. So this is what's huge. Look at this. 4.2 billion trailing month revenue, consistent track of revenue growth, or 12-month. That's very attractive. 9 years of consecutive dividend increases. That's what I like as a dividend investor. 9 years of consecutive increases, and they're just adapting. I like the way that they adapt. Now I'm going to show you their dividend history. 55, 58, 61, 61.8, PE ratio 21.13. Does PE ratio matter? No. FFO. Now, again, like I said before, if a PE ratio on a real estate investment trust is like really low, that's where the red flags start popping up. But FFO is the important thing. I just want to emphasize that. I didn't really emphasize that much in videos, but I'll be a little bit more technical for you guys. The dividend yield is 5.51%. The annual dividend is $2.47 right now. Very attractive. I own this real estate investment trust, and I'm long in it. Let's check out the next dividend stock. I've been really emphasizing medical properties trust. This is a real estate investment trust, obviously medical, and I'll show you their portfolio. The dividend yield is 5.54%. They've made a ton of acquisitions. They're sitting at $16.10 and $22.82. So let me show you what their portfolio is about and why I absolutely love these guys. And I'm going to keep on buying more. They have 446 properties, 47,000 licensed beds, and I'm going to tell you, it's hard to get a bed right now with the pandemic. 9 countries, 51 tenant relationships. Let's check out their portfolio. They own hospitals in 32 U.S. states, 6 European countries, Australia, and South America. So they're expanding. Again, the portfolio is $22.3 billion, 446 facilities, 9 countries. 72.4% are general acute care hospitals, 10.7% are behavioral health facilities, which are going crazy right now. Behavioral health is off the chain. It's an epidemic. Inpatient rehabilitation hospitals, long-term acute care hospitals, freestanding ER urgent care facilities, and other. General acute care hospitals are being overwhelmed and bombarded. Same thing with long-term acute care hospitals because people are getting sicker. Unfortunately, some of these stocks that I will correlate MPW with and take the hint, these are in demand. So, there's a rise for obesity. There's a rise of hypertension. There's a rise of strokes because people are not taking care of themselves. And these guys are just filling beds like crazy. I see these guys getting bigger, stronger, and more efficient over the long term. This is why I own them and why I'm long in them. Let's check out the next dividend stock. That next one is Spirit Realty Capital. I own this one. I bought this in M1 Finance with the dip. In the past 5 years, has not done too hot against the S&P. It has not jumped up too fast either, which makes it very attractive as a dividend stock. Dividend yield is 5.22%, and it's just rolling. The year range is 29.40 and to 52.29. Let me show you what Spirit Realty Capital is about. So this is what I love about these guys. They have 1,887 properties, 306 tenants, and they say we continually work to improve our portfolio with strong, diversified tenants that consistently perform. Spirit Realty Capital seeks investments that represent opportunities to provide superior risk-adjusted returns for our stockholders, growth, and stability for our tenants. As of June 30th, 2021, our diversified portfolio comprised of 1,887 owned properties with an aggregate leasable area of 45 million square feet across 48 states and 28 retail industries. Wow, say that 10 times fast. 28 retail industries, 99.7 now speaking a tongue twister, 99.7 occupied, 54.2% publicly owned. Man, I cannot talk. The top 10 tenants, Lifetime Fitness. People are going back to the gyms. Church's Chicken, In Demand, BJ's Wholesale Club. That's never busy at all. At Home, they're busy. Home Depot, people are going crazy there. Circle K, everybody goes to Circle K. CVS, Walgreens, Dollar Tree, Family Dollar, everybody goes there. GPM Investments, very popular. So this is what I like. Health and fitness, convenience stores. They're well diversified. Dealerships, movie theaters, not very high, but that's good. Entertainment, dollar stores, car washes, grocery, home decor, specialty retail, sporting goods, department stores. So they're very well diversified, which make them very attractive. And my gosh, their dividend is beautiful. Check this out. Holy cow, are you seeing an increase? 18 cents, 62 cents, 63.8 cents with a dividend yield of 5.06 with a PE ratio of 46.6. Again, FFO, but FFO, like I said, look at this, 18 cents, 12 cents, 62.5, 63.8. Dividend yield of 5.06, annual dividend of $2.55, $48.93, less than $50. You see how many people are there? 99.7. Very well diversified real estate investment trust. I am loving it. And I'm buying more. I have them on M1 Finance. I love it. They're increasing their dividend. Very attractive, very aggressive. I like that with a 5.06% dividend yield. Love it. Let's jump to the next stock. That next one is British American Tobacco. PE ratio 9.75. The dividend yield, I'll go over that. So the market cap is 83.11 US dollars. The year range is 31.60 to 41.14. There's a dip. I'm just going to tell you. And this is what makes these guys very attractive. People are going to smoke. They don't care. I can tell you they don't care. I don't care how much I educate people, and I feel terrible saying this. They're going to smoke. And look at MPW, smoking, strokes, beds are going to be filled. Hypertension, smoking. Actually, and you know what? With smoking, it's actually terrible for the coronavirus because it gets in you faster, activating the ACE enzyme. So smoking's even worse for this pandemic. It's one of the worst things you can do. Let me check out the revenue real quick. The revenue's increasing in the past few years. 19, 26, 32, 33. Even during the pandemic, they still made more money. And guess what? Their dividend is hot right now. They're making money and the dividend is hot. Let's check that out. 62.7, 66, 67, 71, 74 cents. 7.95, well, I guess they said 7.95% dividend yield. 36.27, less than $50. It's not killing the S&P. Annual dividend of $2.96. How can you say no to that one? Let's jump to the next dividend stock. And this is another stock. 7.48% dividend yield, PE ratio 19.67, $48.14. They're targeting the Mary Jane group. Of course, you know who Mary Jane is. And they're really expanding and really figuring out what they can do as a company, because obviously smoking is a big thing. They are huge with that. People are going to smoke. People don't care. They have a lot of dip that people dip, and just go to the grocery store. Look at how many people dip, or the gas station that people buy dip. I mean, it's ridiculous. And these are mainly Altria products, so you know I cannot tell you how many people don't care. I mean, they don't care that there's a high risk of COPD, emphysema. It just doesn't matter. And I'm going to show you how much revenue they're making and how their dividends doing. They're still making cash. They're actually generating profit during the pandemic times. So people are smoking. They don't care. And they're going to continue to smoke. This one is hot. Okay, this one is very hot. And I like the operating income or expenses. It's in the positive. So I like that. Things are strong. They're adapting. Their dividend's beautiful. Check this out. And how do you say no to this? And again, I will go over one of my favorite stocks that I just bought today, and I'm going to go over that. It's a new one. It's less than $50. It's right now, if you look at Altria, it's 80 cents, 84 cents, 86.90, $48, 7.41% dividend yield. This is why in M1 Finance, my monthly dividend stocks, covered call ETFs, ETNs, I want them buying this because I know this is going to increase its dividend. QYLD, RYLD, XYLD. I just added Brookfield Real Assets Income Fund back, 19 cents. So I'm going to try to get these stocks. I'm trying to buy these stocks with these monthly dividends. I want the monthly dividends really start kicking in so that these can start buying the quarterly dividend stocks. And then these quarterly dividends start buying the monthly dividends. And this dividend portfolio just starts kicking in. I want those covered call ETNs really start pumping those dividends into Altria, Spirit Realty Capital, and MPW. And this new one, which is VC Properties, I capitalized on this one big time. They're taking a dip. People are freaking out about the pandemic right now. The dividend yield is 4.89%. Now, these are properties that are entertainment properties, which I'll go over real quick. The market cap is $20.54 billion. The year range is 22.13 to 33.35. Very attractive dividend stock. You can't say no to this one. And I'm going to show you its dividend history and how it's doing. And this is not just even the golf locations. Okay, this is the Jack Casino Cleveland, pretty popular. The Thistledown Racino, these are busy like crazy. Greektown Casino Hotel, they're always busy. These Jack ones in Ohio are crazy. And then you have Caesar's Palace, Herrera Las Vegas, Harrah's Laughlin, Harvey's Lake Tahoe. These are booming. People are waking up. They're starting to go out a lot more and travel. How can you say no to these? And they're going to just get bigger, and their dividends are going to get bigger, and their dividends are going to increase. So let's check out their dividend history. Look at these dividend increases from 2018 to 2021. It went from 26 to 36, and they're increasing their dividend just about every year. It's sitting at 29.51 with a 4.46% dividend yield. How do you say no to that? So if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm pretty much like choking on my coffee doing this video. But these videos are free to you guys. And I do these videos for you guys. Everything's free. All I ask you to do is smash that like button, hit the notification bell so these videos are free for you guys, and let's have fun. I make these videos for you guys as dividend investors. I want you guys to make passive income. Again, this is only for entertainment purposes only. This is not financial advice. I have a disclaimer in the comment section, but I do these for you. I mean, you got to hit that bell because, I mean, sometimes, when I say I'm going to do 3 to 4 videos a week, all of a sudden, boom, I'll do a random one after my shift. Boom. So you'll be very much aware that these, videos will be posted. And these are for you guys. You want to make money. I heard very positive compliments and stuff. I was mentioned in somebody's YouTube video about being an icon, kind of like, and a kind of like a celebrity, and thank you so much. That was pretty awesome. And I'm looking forward to doing collaboration videos with some people in the future in the next maybe month or two, if I can squeeze that in. If not, definitely right after my semester. There are some people that I have that want me to do collaboration videos with them, and I'm not going to say no because these are very high profile dividend investors that want to have me on their channel. And I'm not going to say no, and I'll definitely send you guys the affiliate link. So if you guys are new, make sure you subscribe and hit that notification bell so you don't miss future videos. You guys have a good one. And again, I'm choking on my coffee again, but you guys take care.